This special podcast is brought to you by Futuregrowth Asset Management, and we're chatting to Angelique Kalam around ESG issues. Angelique, what is ESG? How would the man in the street understand what ESG is?
Okay, so as an investment manager, we have to manage and look after pension fund money. Those are our clients, our underlying clients. We third-party pension fund managers, and so we have a fiduciary duty, and part of that duty is to look at investments that we manage, each company that we invest in, and consider what the risks are to managing that specific company or investing in that specific company. So because we're a fixed income house, primarily a fixed income house, we advance loans to companies. So a company would come to us and say, Futuregrowth, we'd like to borrow 20 million rand, and we'd assess that company. Now, previously, when analysts looked at companies and analyzed companies, they'd look at it purely from a financial perspective. Now, ESG, the acronym, refers to considering the environmental, social, and governance issues. And for far too long, investment analysts have only had a one-sided view of looking at analyzing companies. And we've realized now that, there's a place for investment analysis that says the softer issues like environmental, social and governance issues is important because there's risk involved there, potential risk that we should be assessing as well.
Can you give us an example of a risk that falls into one of those categories that may have been overlooked?
So part of our investment process, probably about 18 to 24 months ago, we started thinking about the impact of the social issues around the microlending sector. So we know that, the industry has now been formalized. They needed to comply with the national credit regulator and so forth. And, you'd expect that within that industry that it become more competitive and the rates for the consumer would be much better, but that's actually not what happened. And 24 months ago, we took a viewpoint as a house. We debated the issue internally, and we came to the view that, it was actually not, it wasn't a net positive for the consumer, and we felt that actually there was a cycle of impoverishing people continually. And that's a great example of how you screen in a business for potential social issues. Some further social issues that you could screen on is whether the company complies with labour and minimum wage standards and so forth. And obviously that's relevant also to industries like maybe the agricultural sector that has where that type of issue is quite rife. Then governance, on the governance side, some examples of governance would be, independence of your non-executive board members. So yes, at a board level, you always have non-executive directors, but are there any independence there? As well as separation of duties between the chairman and the CEO, and some issues that we always, that's highlighted for us as a key governance risk is any turnover of the independence of the board, as well as the risk or audit committee. Those are things that those are red flags for us, and we look at that quite critically and say what's happening at that company.
So this obviously forms quite an integral part of the future growth analysis process, the ESG principles. Is this mainstream across asset management in South Africa?
I think we're definitely moving towards it becoming mainstream in South Africa. We've had quite a significant change in regulation in 2011, I think, through Regulation 28 of the Pension Funds Act, that stipulated that pension funds have to give consideration to all issues that could materially impact the funds or assets sustainability and all issues including environmental, social and governance issues. So it's part of what pension funds as asset owners should be considering. And we are seeing more and more pension funds giving consideration to this by actually engaging the investment managers on these issues. And I think more recently we've been seeing many more investment managers coming to the party and speaking out around these issues. I think the proof's in the pudding. For Futuregrowth, and I think for the industry in South Africa, it's a learning process. As Futuregrowth, it's been a process of learning and implementing change around these issues, shifting mindsets around analyzing investments from a pure financial to shifting mindsets around thinking about sustainability issues doesn't happen overnight. And so it's been a slow process, and we've definitely been trying to integrate these issues more and more. And over time, I think, we'd be able to say that we are doing it holistically. But it's been a process.
And is there any benefit to the company?
To the underlying borrower?
Yes.
Most definitely, because, for example, on the unlisted side, we structure most of the loans ourselves. We have a big credit team that does all the structuring, and the benefit of that is that we have a one-on-one relationship with the borrowing company. And so when we do the screening and analysis, the due diligence on that specific company, we usually give them feedback in terms of, where the potential shortfalls are in terms of E, S, and G. And we're never prescriptive in telling them, you have to fix this. But we point it out and say, we recommend that you seriously consider this going forward and implement a process to improve these, to bring it up in terms of best industry practice. So for the company, I think it highlights to them the importance where they are possibly lacking, where they can improve to make their business more sustainable.
So you view it as a partnership from your side, and a learning process for both company and asset manager?
That's correct, Candice. When we partner or advance a loan to companies, we view all relationships as partnerships, because we don't have the view that we're just going to be advancing a loan to you and we're going to leave you to do your own thing. It's a partnership, and we want to see that company grow and improve and flourish and be profitable. So we do see it as a partnership, and we engage with the company constantly. We have that relationship where I can pick up the telephone and speak to the CFO and ask him, what are you doing about this? And have you considered this? Obviously, if it's a critical item in terms of governance, we will be a little bit more prescriptive and say, we really recommend that this needs to be addressed. It's a key thing for us, and we do write it into our loans and terms of agreement, where we will say that if anything happens to the company that could materially affect the credit quality of this, that would be a problem.
Angelique, finally, what is the relevance of ESG to fixed income?
The primary thing that we want to manage at all times is to manage risk. So we're advancing a loan. We want to ensure as much as possible that we manage that risk so that it doesn't default. Obviously, external factors like forward and so forth, we can't account for something like that. So when we look at analyzing a company and doing the due diligence, we look at all the economics, the financials and so forth, the operational stuff and so forth. But the soft issues, like the sustainability issues like ESG, there could be material risk there, and we need to price for that specific risk. So the primary objective of including ESG in any investment process is to mitigate risk. As a house, as a lender, we want to mitigate risk at all costs. We can't see into the future, but we need to take into account and identify at a company level what are the risks to the specific company, if any. Sometimes there isn't an environmental risk. Sometimes the company isn't exposed to any environmental issues that could pose a specific risk, but sometimes there could be. And so we need to at least go through the process and say, yes, we've considered these, we've ticked the boxes. Not that it's a tick box approach, but we've identified, we've given it thought, we've analyzed the company, and yes, there is a material risk, and what are we going to do about it if there is? And so we will price for that risk accordingly. Okay,
and as an investor, one of the things that you're always looking out for is mitigating risk in your investments. Angelique Kalam, Manager of Sustainable Investment Practices at Futuregrowth Asset Management, we thank you very much for your time.
Thank you, Candice.
This special podcast is brought to you by Futuregrowth Asset Management.